As we kick off the new year, the big question we're hearing all the time frequently is, how's the market? What's the outlook for this year? And there's a lot of optimism in the marketplace. My name's kdee. Welcome back to our podcast, The Ins and Outs of Selling a Business. Happy New Year, everybody. 25 is shaping up to be a very strong year. Before we look at 25, let's kind of look back at, what kind of transpired in 24. As Yogi Berra would say, deja vu all over again, right? When we went into 24, we were looking at a lot of money on the sidelines, a lot of optimism, a lot of enthusiasm, but things didn't quite pan out that way. There were several factors. That enthusiasm, the optimism kind of waned. There was an expectation that interest rates would be reduced sooner than later. That didn't happen. It was some marginal decrease in interest rates, but not to the level people anticipated. Inflation kept on being an overhang, which was a concern to the marketplace, which created what we call, skepticism, and the buyer pool therefore created a difference in valuation expectations between buyers and sellers. Other reasons why 24 didn't meet its expectations were, there's still a lot of geopolitical tensions in the marketplace, regulatory scrutiny, what's going to be happening, who's going to be president. Overall market conditions really hadn't changed that much from 23, which was a down year. So, and interest rates, as I said before, were high. So the bright spot in 24 was what we call the lower middle market, which is where Osage does almost all its business. Typically companies valued $100 million and less. Even though there was a decrease in a bit in volume in 24, valuations held well and actually went up a bit. So in fact, from our experience, we saw a number of companies that we represented that are currently either under LOI or sold in the fourth quarter, that the multiples were on the higher side, which was great news for our clients, which helped us get these things over the finish line. The key thing that really affected 24 was outside of all these things was that, it was an election year. So, we weren't really sure what was going to happen. So a lot of this stuff is getting pushed off. Now, to the market's benefit, the fourth quarter of 24 did see some increase or tick up in volumes, which is good news. So here we are in 25, and right, a lot of optimism, a lot of enthusiasm. There's a ton of money on the sidelines. Last count I looked, over $1 trillion of dry powder or cash is sitting in private equity and other institutional capital looking to make investments. The election is settled, which is good news. So the business is anticipating a more friendly regulatory environment, which is good news. Business is anticipating, favorable tax policies, which is good news. The economy continues to improve, which is also good news. The jury's out on interest rates. There was a small cut, I believe, recently, but we're not sure where that's going. There is some concerns regarding inflationary pressures in 2025, so the jury's out on that. But the overall sense is that 25 is going to be a good year for M&A. They also feel, and these are from reporting you can look up, our sense as well from what we're seeing and deals we're working on, is that there's more of an alignment in value between the buyers and the sellers, which will help, facilitate getting deals across the table. All this leads to a certain level, what I would call of confidence in the marketplace. And when there's confidence, that reduces the uncertainty, that reduces the skepticism, and it makes for an environment where deal flow should, if everything stays on course, should increase, and it should be a good year for M&A. Now, probably not as good as it was in 21, 22, which were banner years. And of course, as you recall back then, interest rates were, 3%, 3.5%. So it's almost quote unquote free money when you're doing deals. So values were high. But a lot of things have turned that we anticipated turning last year now are actually in effect for 25. So the market appears to be in a position for a strong year. Further confirming that is that, people, the sellers are ready to make a decision. They're ready to sell, right? I call it from our client base, kind of like the back half of the baby boomers. These are older owners, first, second generation businesses that, are either approaching 65, 63, 67, even 70 years old. And we have clients right now, I'd say, our oldest client right now that's going to market is 71, and we have several clients that are in their mid to late 60s that said the time is right. The other aspect is that if you look at some of the data on private equity funds, they were huge buyers, back in 2018, 2019, 2020, 21, et cetera, right? These funds are getting towards their lifespan, right? They're getting demands from their investors to start returning capital. So if you look at the funds, and there's reporting out there, you can look it up, is that there's a number of funds that are in their fourth, fifth, sixth, even seventh year. So kind of legacy holdings, they need to start selling those off and returning that capital to their investors. So that's going to have a big impact on the volume of M&A deals that are going to transpire or execute in 25 and beyond. I think these, and there's certain sectors that are showing some really robust growth that are getting a lot of attention. Technology, AI, environmental, aerospace, all these areas are very, very highly attractive, highly desirable assets to potential buyers. And a number of these companies will be coming to market this year. So it's going to create what I would call a lot of enthusiasm and positivity. So we're early in the year, but all the signs are looking towards a strong year for 2025. Again, I think the demand on the buyer side, the amount of capital sitting out there is we're seeing it. I mean, we're 2 weeks into the year for us, or a couple weeks into the year. The amount of inquiries we're getting at Osage Advisors from buyers, hey, what do you got in market? What do you got coming to market? These are the areas we look at. I mean, between myself and our other team members, we're literally getting hundreds of emails and calls about our activities. Says we're looking for this, we're looking for that. And on top of that, the activity levels that we're seeing from owners thinking about the time is right to sell is also off to a very robust start for us. I mean, we have had several conversations already. We have several set up with potential clients that are looking to make a decision about whether now the time is right to sell. And they're asking us during these conversations, how is the market? And our response to them is we feel that 25 is going to be a good year. And by the way, like I said earlier, we focus on companies with typically less than $100 million in transaction value, and those valuations are holding up. It may be a little slightly increased going into this year. So if you're thinking about it, this could be the right year to make that decision to sell your business. And so, we feel good about 2025. We felt good about 2024, and for us, Thankfully maybe to the contrary, but we had a good year in 2024. We had a lot of activity. We signed up several accounts, we closed several deals, and we put several under LOI. So, that haul for us is flowing into 25, and we have a good story to tell, and we have support to back it up. So when we talk to a potential client, say, what are you seeing in the marketplace from a valuation perspective? We can give them real-time data about, valuations are up, right? I think the other thing is that maybe is not so much discussed is we're finally giving over that overhang of of COVID, of the pandemic. It seems like, well, here we are, 25, the pandemic. So what? March 20th, 2020, right? So it's like we're coming on 5 years, believe it or not. And when we came out of COVID, there was a lot of pent-up activity and there was a lot of deals done because, there was so much cash out there. Interest rates were at an all-time low and the valuations were up and things got transacted. And so when rates started to creep up, other things came into play that kind of caused the market to take a pause, so to speak. And, the supply chain issues of 23 and 24, a lot of that has kind of evened out, right? We're back to what we call, historical normal running our business. Back when supply chain issues were happening, it was hard to get a read on, I had to build my inventory so I could feed my customers. So instead of buying, having my inventory levels at $5 million, I'm carrying $8 million of inventory. And how's that affect me long term? How does it affect me? How am I going to work off that inventories, right? So there was a lot of bumpiness. So it was hard for the buyer to get a read in a lot of these deals of like, what is normal operating, right? What is historical? What is looking for, moving forward into 25, 26 and beyond, the growth strategy. A lot of that is kind of behind us now. So when I look at your financials, some of that stuff that was, let's say, bumpy, is kind of been smoothed out. And so you're looking at, 22, you're looking at 22, 23, 24, projected 25 numbers. And there's a more of a comfort level in the buyer pool of that these are more historical norms. There's not these blips and things. So trying to do the calculus of what it would really look like if we weren't in a supply chain issue or in a pandemic. A lot of that is kind of falling to the background now. So we're finally getting back to some more, I'll call it normalcy or historically running your companies. And I think that's going to have a positive impact on transactions moving forward because, a lot of buyers in 23, 24 were like, they couldn't get a handle on it. So there's a lot of uncertainty. So they kind of either priced it into the deal or they walked away from it. Now, what could be things that could, derail all the optimism for 25 that derailed 24 in a lot of ways? The global geopolitical climate we're in right now, the tariffs coming up, supposedly on a new administration with China, with our neighbors to the south and north, with Europe, that could have an impact. There could be some inflationary pressures, could cause the Fed not to reduce interest rates. Inflation is not a good thing, right? If there's inflation, that means interest rates will likely go up. The cost of capital goes up. The valuations go down. Do the math, right? Those kind of things could have an impact on deal volume and getting to a place where the valuations are the buyer and the seller of like minds. If there's any kind of regulatory changes that happen, and then, overall market volatility, I think that these kind of things could, we don't know right now how those can impact us. But if we have a lot of inflationary pressures, which causes the Fed to, not do any rate cuts or maybe even do, God forbid, rate increases, that could have an impact on the market. One area I think also that could be beneficial to the market is cross-border transactions. And we're seeing it at Osage. We have a couple of deals right now with what I call foreign buyers, Canadian buyers. But they're looking at the tariff situation, and they're looking, these business owners, that are saying, okay, I need to have a production facility in the U.S. I mean, I can't take on a 25, 30% tariff and sell my product into the U.S. So I need to be able to manufacture that product in the U.S. So we're having a lot of inquiries coming in from specifically Canada and Europe about our deal flow because they want to have a presence. So it's going to be interesting, to see how this all plays out in 25. We knew 23 was going to be a tough year because there was so much uncertainty in the marketplace and rates are rising, inflation was up. 24, we had a lot of optimism, but that waned over time because a number of aspects we talked about. But 25 seems a bit different. I think 25, there's, we have a new administration. We have favorable, as I said earlier, regulatory policies, tax policies, business-friendly climate. So, and we have owners that are at the point where it's time. It's time to make that decision to move on to that next act, so to speak. That transition over the next couple of years out of their business on their terms in a way that works for them and their family. So we're excited about 2025. Everything that we see in the first few weeks of the year gets us really excited. We've had some great conversations with business owners thinking about selling, and they seem to be of the mindset now that I think now's the time to make a decision. So, time will tell. As always, I'm hoping I'm here next year at this time and saying, hey, 25 was a great year and 26 looks to be a better year. So in any event, we're excited. We'll keep you up to date as we go through our podcasts and what we're seeing in the marketplace. And my name's kdee, President of Osage Advisors. Thank you for being here today in our podcast, The Ins and Outs of Selling a Business. If you like the podcast or interested in learning more, you could always subscribe to our YouTube channel. Learn more about Osage Advisors. You can visit us on our website at osageadvisors.com. If you have any questions about today's podcast or about the marketplace in general, feel free to shoot me an email at kdee@osageadvisors.com. Feel free to, or pick up the phone and give me a call at 860-767-3273, extension 1001. Thanks again for being with us today and have a great day.